Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. With me on this edition, I have my colleague Neetu Chandra Sharma joining in, and we're going to be talking about the buzz in the diagnostic space. Metropolis Healthcare, which is a path lab chain, has announced the acquisition of Delhi NCR-based Core Diagnostics, which is a company that specializes in advanced cancer testing, and this deal has happened to the tune of 247 odd crore rupees. It also involves a mix of both cash and equity, 55% funded by cash and 45% through an equity swap. Joining in now to discuss the aim behind this deal, the growth potential of the Indian oncology market, and the need for advanced cancer testing, and much more is the company's top management now. Ameera Shah, the promoter and executive chairperson of Metropolis Healthcare, is with us on this edition. Warm welcome to you, Ameera, and thank you so much for taking the time out. Congratulations for this deal. Do tell our audiences and our viewers first up the broad contours of this deal. How are you really funding this deal, and the timeline as well, as most analysts are also terming this as a very smart move by your company, as it also helps Metropolis to cash in on the rich valuations that there are. Help us understand what was the aim and what do we see going forward.
Thanks, Sakshi. Happy to be here. The aim is very simple. Metropolis is already known as sort of the most respected path lab chain in the country for the variety of test menu we have, 4,000 varieties of tests, and the kind of quality and precision that we deliver for patients who are in the more critical illnesses. While we do testing in early stage and super and specialized cancer testing, there was a part of cancer testing which is a super specialized, which we didn't have as part of us. And therefore, one option was to build it technically, or the second option was to partner with somebody who already built it. And therefore, you were able to sort of leapfrog. What we liked about Core is not only does it have great quality, it has established a relationship of trust with more than 1,700 oncologists across the country, and especially in the north and east of India, which is, of course, a market that's very interesting for us because we are already leaders in west and south of India. And we're number 3 or number 4 in north and east. And along with that, we were going to be able to really not only get the technical capability, but like I said, the relationships also with 1,200 hospitals and labs. So overall, it made a lot of strategic sense for us. When we thought about funding the deal, we were very clear that considering this was not a highly profitable business, it was actually a great opportunity to buy it at a very reasonable price. And to be able to create that profit pool within our organization and therefore create that value for our shareholders. And funding this through our internal accruals, in terms of 55% cash, 45% through stock swap, it created two things. One allowed us to use our currency as, our stock as currency, which is always good when you're at a fairly rich valuation. But second, also the sellers were also able to be motivated to sell at a reasonable valuation because they potentially have an upside as the stock grows as well. And they are able to get some benefit of the synergies that we're able to create out of both these partnerships.
Rightly so. Could you also elaborate a little bit on what makes Core Oncology unique as compared to your current offerings then, and how will it really unlock the value for shareholders currently for you?
So if you actually look at it, when a patient is still figuring out whether they have cancer or not, and they're just doing basic early end testing, we obviously do all of that along with the specialized testing when you're sort of figuring out your, how bad is it, right? But then when you get to the targeted therapies, a particular organ or a particular issue in cancer and spread across different parts of the body potentially, you also need to do genomic testing. You need to do very high-end cancer testing that allows the doctors to treat the patient accurately and correctly with the right doses. That's the testing that Core has that we, instead of building, we decided to buy. And bring it as part of the larger umbrella. The synergies actually can be across multifolds. You've got revenue and synergies. The revenue synergies can be really about cross-selling our services to their customers and vice versa. And of course, the cost synergies can be the consolidation of labs, the material costs, the other overhead costs that usually come into any organization. And we believe that by executing both these revenue and cost synergies, like I said, there is enough profit to be created within return on our capital.
Ameera, we want to understand from you that how is this deal going to enhance your company's market position? You can elaborate on that.
So what is it, sort of when you're working with an oncologist today, that means Core did not have the basic players. So obviously with the revenue synergy, we expect to see a fair CAGR growth over the next few years. And like I said today, you'll be able to create, you're paying today, if this was, let's say, a fully profitable company at a mature scale of 25-26%, the value of this business would have been sort of, 6, 7, 800 crores, right? But today, the fact that you're buying it at approximately 147 crores, because it's not fully fleshed out profitably, gives you an opportunity to obviously create that value for the shareholders in Metropolis.
Okay. Ameera, could you also tell us what is the current contribution of the cancer diagnostics to current revenues, and how will this change post the acquisition as well?
So currently, cancer diagnostics contributes 4% to Metropolis revenues, and with Core coming in, it'll increase to 10% of Metropolis's revenues across the oncology space.
And what is the peak potential that we can expect over the next few years?
I mean, look, if the oncology space grows faster than the rest of the business, which is what we're expecting it to, partly because oncology is just growing that fast, globally and in India, and also then because you're a leader in the cancer testing space, you can hopefully outgrow the market. We should very clearly sort of see this contribution keep increasing. I don't think we have a target in mind because the other areas are also going well for us. But I would be surprised if in the next 2 years, this 10% can become 15%.
Okay. Got that.
Ameera, we are also seeing a sort of consolidation happening in the diagnostic industry. So, what are the global trends that you are seeing, and how does this deal align with those trends?
See, there are 2, 3 different kinds of consolidations happening. If you look at globally, we had seen over the past 10 years a bunch of single specialty diagnostic chains emerge. People who thought, the big guys are not focusing on cancer, or the big guys are not focusing on genomics, or they're not focusing on neurology, whatever. And people said, we'll come into that space, bring expertise, and really create that market space. And many chains did that, or many individual labs did that. I think what they've come to realize in many years is that the unit economics of a single specialty are not always easy to understand and easy to sort of get a big positive number on. And therefore, they're finding that while significant profit, and therefore, globally, the large companies in US and Europe are actually buying out some of the single specialty diagnostic players because they believe that as part of the larger group, actually the costs, the acquisition of servicing, actually get amortized across multiple different service lines rather than only one therapeutic segment of chemistry. Because you're working with a hospital, for example, that's a multi-tertiary hospital, you need to provide them support on gastro, neuro, nephro, onco, on multiple different varieties of care. If you're only a single specialty, that becomes challenging. I think in India, we are also seeing a different kind of consolidation, which is, post-COVID, you're seeing a movement from unorganized to organized increase. So you are finding unorganized players who are finding it more difficult to survive. They're finding it difficult to grow. And many of them are looking to sort of partner with the larger chain to sort of say that, hey, we are actually more safe and we can grow better as part of an organization. So there's 2 kinds of consolidation, I think, happening.
Ameera, how do you now plan to scale up Core's operations after this acquisition going forward from here? What is it that you additionally will be doing?
I mean, we'll obviously continue to invest in the R&D segment of Core because that's really the USP of it. So we'll invest in technology, some people, and really grow the scope of testing within oncology and potentially outside oncology as well. So that's certainly one area. We'll certainly look at potentially consolidating some of the labs. I mean, if we find Metropolis and Core have got labs in the same locations, there may be an opportunity there to be able to consolidate some of it.
Okay.
We'll continue to expand, the scientific team in the front end and the back end to be able to really make sure that we are scaling up the growth and really being able to provide the services not only in the 200 cities and towns that Core is present in today, but in the 750 cities and towns that Metropolis is present in. And really, the story about making cancer more affordable, cancer testing more affordable, more accessible to all India across the country.
Okay. What is the plan then in terms of expansion right now from your current centers going forward with Core also coming in? What can we expect from you now?
So, I mean, we are already at Metropolis is already at about 4,500 centers and about labs. So we'll continue to expand, obviously, the number of centers as a combined unit. We will be adding about 500 centers a year. I'm hopeful that it will the next few years is a higher number than that. So it's about productivity of the existing centers, but also expansion of the new centers. And in the last few years, Metropolis has almost doubled its lab capacity. We used to be at 100 odd, and we're now close to 200. And next few years from FY26, the plan is to actually expand the collection centers and not the lab network as aggressively. So the lab network is already there now. Now it will be all about placing the spokes, picking up samples, creating that access, and bringing those samples back to the labs that exist.
Do you also face a lot of competition there? A lot of, lower price ticket entries are coming in from various healthcare diagnostic startups right there in that space, since you're talking about collection of samples, etc. So how are you planning to deal with it on ground?
To be honest, Sakshi, competition will come in with what they have, right? And if you're lacking expertise or you're lacking sort of knowledge on a subject, then one way to sort of, lower prices, right? But we have to understand that we're dealing in healthcare, and patients are also smart, consumers are smart, doctors are smart. They understand that when you're talking about dealing with cancer, a stroke, your pregnancy, you're not looking to see who's giving you a 50 rupees coupon code. You're really looking to see who's going to give you the right result, which you're going to base your entire life's treatment on. So honestly, we don't really worry so much about competition that is dealing on price, because the unorganized market for the last 20 years has dealt on price. So what's new, right? If there was somebody who was truly an expert coming in, that would worry me more than honestly competition coming in on price.
Okay. Beyond cancer specialty diagnostics, are you also looking at any other specialty diagnostics after Core in terms of inorganic expansions?
We pretty much have a very large test menu, probably the largest in India, and we offer everything in India that's globally available. There are some gaps in the test menu, and of course, we'll be looking to build those out. Whether we do a buy or we do a build, I think we'll keep making those decisions as we go along. But overall, I think Metropolis has worked very hard over the last 1 year to really create a very interesting M&A funnel pipeline, and we were very happy when Core fructified. And of course, if there's any other, good news, we'll be happy to announce it at the right time.
Okay, wonderful. Well, great speaking to you, Ameera. Thank you so much for sparing your time, for explaining to our viewers what this new deal means for you, the company and the vision going forward. I wish you all the very best. Thank you so much for speaking to us and our wider audience through Business Today.
Thank you so much. Thanks to both of you.
Thank you, Ameera.
Bye.
All right, we'll wrap it up at that, viewers, now on this exciting conversation. And Neetu right there will continue to get us all those updates from the healthcare pack and the pharma pack for the viewers of Business Today television. All that's buzzing, all that you should know as investors in the pharma space will be brought into you. So stay tuned. There's a lot more to come up on your screens even after this. Hello and welcome. You're watching Business Today television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we showcase for all our viewers the latest edition of the Business Today magazine, and this time around it is our 33rd annual special. I already have the copy in my hands and this is something that you don't want to miss. On this video, we're going to be sharing some key insights from this special issue. Joining in with me on this special edition are Krishna Gopalan. He's the executive editor of Business Today magazine, as well as we have Surabhi now with us joining in, who covers the economy aspect as well. This is a special one because this issue covers the BT top 500 most valued companies in India. We take an in-depth tour as to which are the biggest